There are some serious things to talk about right now.
Let's get serious.
The commodity sector, which is your wheelhouse. Gold really perking up today, and I'm struggling for a major reason as to why.
Yeah, other than I haven't seen why, but maybe the U.S. dollar down. I think there was. It was a light day on the on the economic side today, but the one thing fascinating with gold is that it's really doing its job as inversely correlated to the market. And you know, for years you've always heard advisors or investors say have a portion of gold in your portfolio, 10 or 15%. And gold never did well. Like, it didn't perform the capacity that it was supposed to perform. But recently, whenever the market is down, gold has done very, very well. And so, as investors, we're always trying to find some vehicle, some investment product that's inversely correlated to the market. So on days like today, where everything else is typically down, then you're getting some stability.
And I want to clarify your views on gold. Sometimes it can be pejorative to call someone a gold bug, but are you somebody kind of perennially in favor of?
No, they're horrible investments. Are you kidding me? I've never seen. They're the worst destroyer of capital.
The mining companies.
Oh, the mining companies. I mean, they're brutal, and I wish they found religion like the oil and gas companies did. And we'll talk about that. But oh my God, I mean, collectively, they've written down tens of billions of dollars in acquisitions. The CEOs make exorbitant amount of money. The shareholders don't make any money. They pay paltry dividends, and they destroy capital. So no, but gold itself has outperformed the gold mining subsector. So what do you do, like
an ETF?
No, I own a stupid gold. I own a gold stock. I do own a gold stock because there are opportunities.
I guess you don't want to name it now.
No, I do. I own Oceana. I talked about when I was on the first time I came back onto the show. I talked about Oceana, and no, it's actually a large position of mine. But there's a price that you're willing to pay for almost any asset. And that stock is, the board's changed, the CEO's changed. They had some serious issues with regulatory approval for a mine in the Philippines. It's all behind them. But I'm not saying all gold stocks are created equal. Like, Agnico's done a great job. There have been some, but they're few and far between. My point being that once in a while, gold does exactly what it's supposed to do, and that is act as an inverse correlator to the markets and the U.S. dollar. And it's doing that right now.
And so Oceana Gold is one of the picks, and it's interesting you use that word found religion because, I would call the energy sector certainly defines that right now. It's giving back a little bit, but certainly has perked up, from the lows in March. Francis Hordelsky was making the point, though, that as we get into earnings season, you could maybe see a little bit of a fade. It's not, the numbers this quarter are not going to look favorably.
For which sector?
For the energy sector, compared to a year ago, just because things were a lot better. Do you think, though, that's going to matter? Because even at these levels, they're still, cash flow machines.
I don't think it's going to matter that much. In fact, this morning I was at the BMO CAPP oil and gas conference, right? And so I listened into a panel, Enerplus and Baytex and a few others, and seeing Canadian Natural were speaking, and it's remarkable. Like, we talk about the oil and gas sector, and the oil and gas versus there's the gold sector. Like 10 years ago, these guys were willing to grow at any cost. It didn't matter. It was all about showing growth. And they did the same thing that the gold companies did. They just destroyed capital. And you never got a return on your investment. You may have gotten a return of your investment, you get your money back, but you never got a return on investment. And it's just so different, so refreshing to see these guys. In fact, there was one company up there that talked about growing at Whitecap, which I own, and they talk about growing at 8%. And the moderator says, whoa, he says, isn't that a little hot? Isn't that a little high? I mean, in fact, if you grow too much, the street punishes you. And so it's not about growth anymore. It's all about margins and return of capital, and return on capital, I should say, and free cash flow, and buying back stock and paying special dividends. But make sure you have a strong resource base to do that.
And it's really kind of a made in Canada situation, because even with those obvious fundamentals that anybody looking at the results could look at, you have no foreign interest.
Well, you don't have foreign interest, and which is fascinating because, the Canadian, if you take a look at the strength in the U.S. dollar, and the weakness of the Canadian dollar, that's a benefit to the Canadian oil patch. So, if I were a U.S. investor and I wanted exposure to the oil and gas sector, I would definitely look at Canada, for sure I would.
But you probably have an ESG mandate now.
You probably have an ESG mandate, and I guess maybe, so one of my questions, so after the panel, they talked about the generation of free cash flow and how incredible these stocks have, how much money they're making, and it's obscene, and then they can take themselves private in 2 to 3 years. So I asked the question, then why is it, if you're doing everything right versus 10 years ago, why are the multiples still terrible? Like, why do they still trade at 3 times? And And I think I don't think, the answer was it's going to take time. And in the past, we made terrible acquisitions, we did bad things, and we're not doing that anymore. And investors have to recognize that.
And that leads me to my next question. There's always, when you've got these cheap multiples and really cashed up businesses, that is a recipe, and a commodity price that's working for you, that is a recipe for consolidation.
Yes.
Doesn't sound like we're going to get it, though. The appetite is very low.
Not yet, but it's definitely been a recipe for acquisitions, right? I mean, Crescent Point just did a big one. Baytex did a huge one. Whitecap did a large one. They took out XTO. And in the past, what I loved, in the past, any company doing an acquisition in this space, the stocks got killed. But notice, like I said, it's going to take time, and people are going to have to be converted into trusting management. And what I've noticed in the last round of major acquisitions, like the Baytex deal, the stocks have gone up. And in the past, a deal like that, markets would have crushed it. So I think it's going to take some time for people to get back to the space and realize that the management of these companies and the board are recognizing that it's not all about growth, and it's about profitable growth. And to me, I just think it's a great space to be. I really do.
And so you own it through Whitecap. What else?
And Canadian Natural. I own very large. I like oil weighted. Like obviously natural gas prices have done.
Not the integrated, like a Suncor.
No, but Whitecap specifically said, for example, he's got he's got a third of his production is natural gas. A third, but it only represents 11% of his revenue. Wow. It's because natural gas in Canada is about $2.
Yeah.
So light sweet crude is the place to go. That has by far the highest margin, has the highest return. And these companies are talking about drilling and getting their money back in 6 to 8 months at these oil prices. So those are like 30% IRRs.
Yeah.
5% on a GIC, or if you can get, the long-term return on the stock market 100 years is 8% or 10%. But these guys have an asset that at today's commodity price, they can get a return on their investment of 30%. I mean, where else, what other industry can you find that? The problem is, in the past, they always had sometimes they had those high returns, but you never got it as a shareholder.
Right.
You'd wait to get it back, and they'd reinvest it and blow their brains up, make bad acquisitions. But it's different this time.